What is a management accountant? One of the best ways to look at who is a management accountant or what is a management accountant is to examine the CGMA competency framework. So CGMA is the Chart of Global Management Accountants. In that, they outline 4 types of skills that a management accountant should have. First, technical skills to apply accounting and finance skills. Second, business skills to apply those skills in the context of the business or the enterprise. Third, people skills to influence people with information in hand. Fourth, leadership skills to lead within the enterprise. So these are the 4 broad skill set that is propagated by the CGMA as required competencies in their syllabus. If you look at the global management accounting principles of the CGMA that benchmark the finance function for enterprise value creation, there are 4 aspects in it. First is communication that provides insight, that is influential. Second is to have or collect information that is relevant. Third is to analyze the impact on value of that information. And fourth is to build trust on the stewardship that is received from the enterprise within the organization, within the enterprise, and with business partners. So management accountants' typical responsibilities are on reporting, strategies, risk management, taxation, and investor relations. The principles for value creation through the accounting activity is enacted through 4 aspects, which is outlined on the CGMA principles, is to communicate. Now, communication means it's also ability to listen and ability to converse clearly and write clear and coherent reports. The second is analysis. That is to analyze and demonstrate cause and effect relationships with the technical methodologies that are in place. Third is to use those, that's the analysis and communication skills, to transform them into information that is useful for reporting for external users and internal users. And the fourth is the managers with different responsibilities would often require the information in an accounting system to be processed or reported in different ways. So you provide the relevant information to respective decision-making centers or people so that they can focus on the relevant information and make sound decisions. The CGMA credentials with the CIMA UK qualification must follow 5 fundamental principles. First, integrity. The second, objectivity in conducting work. Third, professional competence and due care. Fourth, confidentiality of information. And fifth is professional behavior. When management accountants create enterprise value, they have to keep in mind 3 aspects. First is the benefit cost analysis. That is, whether it is short term or whether it is long term. Return on investment, payback period. They have different implications. Second, the behavioral and technical considerations would influence staff behavioral changes required to accomplish enterprise goals. The third is to appropriately cost for different purposes, to follow appropriate costings for different purposes. The short-term decisions could be costed as variable and fixed costs, and long-term decisions could be costed as using activity-based costing with cause and effect. One of the confusions and misconceptions is cost accounting and management accounting. Cost accounting is only a subset of management accounting, financial accounting, and activity accounting. It does have all 3 facets, but is not in totality of any of those paradigms. There are differences between management accounting and financial accounting. They can be classified into 4 themes. The purpose of information. Management accounting makes decisions about enterprise goals, whereas financial accounting uses the information to report about performance to stakeholders. Second, information uses. Management accounting primarily caters to internal users, and financial accounting primarily caters to external users. The measurement rules of information. In management accounting, it's contextual, it's purpose-driven, and has a time horizon influencing on it. Whereas in financial accounting, it's compliance-driven. The fourth is the breadth and the depth of reporting. In management accounting, it's contingent upon the user, whereas in financial accounting, there are standards to comply, and the breadth and the depth is defined by the compliance requirements. The fifth are the behavioral implications. In management accounting, the financial and non-financial events are reported. Even non-financial events are not so directly measurable. But in financial accounting, because of the compliance requirements, primarily the measurable events are reported. So this brings us to the end of the video, and thanks for watching. I'm Professor Indra Bisekara.